Welcome everyone again to our second of the series with ARCPA Education in association with LexisNexis Risk Solutions. Today we're going to be covering off the new CDD requirements under the AML Act in Australia, something that I'm sure everyone on the call is looking forward to. And we're obviously extremely lucky today to have people from the industry to be walking through these new requirements and what the remittance industry must be adhering to. Obviously, with LexisNexis, we are obviously thrilled to be involved in this series. Again, last week's was extremely and far with the AUSTRAC regulators, and we hope to continue to pursue over the next coming months as we move into 2017, obviously post-Christmas break. Without further ado, I'll pass over to Diane Nguyen from ARCPA, who will introduce our great speaker for today, and we'll jump into the slides and get going. Thank you, Diane.
Thanks, Alex. Thank you, everyone. Thank you again for joining us for the ARCPA ARCPA Webinar series. Alex mentioned it's the second in the lineup of webinars that we're going to bring you to cover a broad range of areas of compliance, not only AML CTF obligations, but also in the new year we aim to bring you topics that cover sanctions, fraud. Today we will cover the CDD requirements that came into effect 1 January this year. It's almost been a year, and to help us and to also to provide that perspective is Elena Lasser from RIA Financial Services. I'll give a quick introduction on Elena. She has had experience in the financial services sector for over 15 years, and her specialty is in remedial compliance with a core focus on payment services. She joined RIA Financial Services in December 2015 and has experience in global governance, risk and compliance management, and has worked for a wealth of payment companies, wealth management companies, as well as card issuers, including American Express, Travelex, and UBS Creston. Without further ado, we'll go straight into today's webinar, which really will give us the industry perspective on what we've had to live with, I guess, for over a year now, the new CDD requirements. So starting off here with a quick introduction to Elena and the agenda. I quickly just wanted to talk about the CDD requirements that came into effect in 2016. They did start off with an assisted compliance period from June 2014. It's almost been a year since the requirements officially came into place, and we thought it a good time to recap on the new requirements. Well, not so new, a year old now, as well as obtain an industry's perspective as to how remittance businesses can implement and operationalise these requirements in a practical way. I guess the key to this session today is really how we look at this implementation in a practical way while maintaining good customer service approach, as well as understanding the commercial implications of how the CDD requirements need to be met. We also thought it was a useful way and a useful time for entities to look at their business, to do a bit of a health check on how they had implemented their requirements, and keeping in mind that the annual compliance report is due on the other side of the new year. Without further ado, I'll hand over to Elena, who will cover off the topics as outlined in this agenda. Thanks, Elena.
Good morning, and it's a pleasure to be here and being invited by ARCPA to present this presentation. I would like to talk to you about the compliance aspect of how we are going and we will actually implement these requirements and how we have implemented this in the past year. This is good that we are now in December, because I can tell you things that were not very well accepted by the customers, and how we actually amend our approach to provide a good customer service, and at the same time be careful of complying with the requisites and also the commercial business side of the company. So maybe you would like to take these tips from my own experience. Following to the next slide, the agenda for all to read is what the CDDs actually cover. Now, On the 1st of January 2016, additional customer due diligence requirements came into effect under the law and the rules in Australia. So the most important, in this slide, we have all the CDD's new requirements. Identify and verify the beneficial owners of the customers. Collect and verify the name of settlers of trust that are customers. Conduct enhanced requirements in relation to politically exposed persons. Consider additional risk associated with these customers, and conduct reasonable measures to update information collected. Obviously, not all of them are applicable to all financial institutions. It depends what is your business, and it depends what kind of customers do you have. In our case, RIA is a person-to-person business. So let's go one by one. Identify and verify beneficial owners of their customers. In this case, and I think the most important issue is two things. First is that thankfully, the law says that for customers who are individual, reporting entities may assume that the customer and the beneficial owner are one and the same. So if a person comes to my location, and I can rightly assume that that person is the beneficial owner of that transaction without any more investigation. And because the law says that, then I am covered. Unless, obviously, I have reasonable grounds to believe that this is otherwise. For example, if the sender is standing in front of me, but he has a person behind him telling him what to do. In that case, obviously, he's not the beneficial owner, he's just the intermediary. Okay, and another point, which I will cover later, is customers. Who are our customers? Okay, that I think that everybody thinks that it's just senders or beneficiaries in Australia, but they're also the agents of the reporting entities, actually the transfer network. So let's go to the next one. Collect and verify the name of the settlers of the trust. In our case, again, we serve individuals, so we don't have trust. But our affiliates, may actually choose to have a structure of trust, and then in that case, we have to identify the beneficial owner of the trust. With regard to the third point, conduct enhancement requirements in relation to PEPs. In the case of RIA, Australia and New Zealand decided not to serve PEPs. However, for example, RIA Chile, yes, they serve PEPs. So it depends on your risk appetite, and the law doesn't say that you cannot provide a service to PEPs. It's just that when you provide a service to PEPs, then you have to have enhanced requirements in place. For the others, consider additional risk with the customers and conduct reasonable measures to update information collected. Obviously, these are applicable to us. So going to the next one and talking about customers, I want to mention that at the beginning of the year, I actually addressed myself to AUSTRAC and say, please explicitly say who are the customers. And AUSTRAC came back saying the customer is actually mentioned in the law and the rules regarding your designated service. So in the case of remittance providers, we actually have 3 designated services. We work under item 31, and item 32, and item 32A. For item 31, the law says that the customer is the ordering customer, in this case, the sender in Australia. Item 32 says that the customer is the ultimate beneficiary in Australia. For example, if my company is the payout company, then, and the beneficiary is in front of me to collect the transfer sent from overseas, that person is my customer. And for all network providers, remittance network providers, item 32A says that their customers are their affiliates.
And I think it's important here, and that's probably a point of clarification for many RNPs, and in Australia there are approximately 80 RNPs at the moment, that this is a point that is maybe not well understood. There are over 80 or so RNPs, remittance network providers, that need to fulfill the customer due diligence requirements for their affiliates, and in Australia there are over 4,500 affiliates. So I guess if you are onboarding and if you maintain an agent affiliate network, the CDD requirements apply to you also, in addition to the customer ones, and pure customer meaning the senders and the beneficiaries
in Australia. Yes. What is more important is that not only do you have to obtain everything that is required when you onboard these affiliates, is that you have to maintain update information. So I think that it is very, very important to say that, okay, it's not that once you onboarded an agent, you forgot about it. No, you have to do all if anything happens, if the agent changes structures, location, anything, you need to know, because the information that you have on file has to be the latest. Maybe we go to the next one.
Sure.
So, also reporting entities are recommended to implement additional controls. So this is what the law actually says. And we are going to explain practically what it means. What is customer ID in accordance to the customer identification and verification requirements? Then we are going to talk in the next slide. The law also says that we must inquire and gain an understanding about the purpose or reason for sending the transaction. Inquiry and gain an understanding of the relationship between the sender and the beneficiary or beneficiaries. And lastly, understand and verify the sender's source of funds. So now we're going to go into the next slide and explain practically what this means. For the first one, customer identification and verification of customer identity. The law provides three types of the way that you can verify. You can verify document-based, you can electronically verify, or you can have a combination of the two. This is very important that we may have this in view when trying to verify our customers. We don't need to do everything by electronic verification, because in certain cases we cannot get the customer identified electronically. So in that case, we may use document-based verification, or we might have a combination of the two.
I think that's also timely as part of the CDD requirements, is that what Eleanor's talking about is you may choose different approaches in the way you conduct identity verification, but it's important to look at your risk assessment as to how you document that within your risk assessment and the controls for the particular customers that you serve. So I think, Eleanor, you talked about customers that are from overseas, that may be here, that might not be able to easily be electronically verified, and there's an acceptance of different types of IDs in place of that.
For example, I'm just going to mention a situation, okay? First of all, let's understand the situation. A customer comes to an agent, a RIA agent. The obligation is for the agent to ask for the identity document, scan the document, and upload the document. Once, obviously, the identity check is done by the agent, and the agent is verifying that the person that is on the photo and the identity document is the same as the person that is in front of him. So the customer is who he says he is. Okay, that's the first thing. In terms of documents, yes, you can accept Australian documents, for example, the passport or driver's license or INI card, and those documents could be verified electronically. by third-party providers. But for example, Philippines is a big corridor for RIA, and many of our customers maybe don't have an Australian passport, and they do have a Filipino passport. Well, the Filipino passport, foreign passport, can also be e-verified by a third-party provider. However, what happens if that customer does have a driver's license from the Philippines? Driver's license cannot be e-verified. But for us, we have a catalog of all the driver's license, the globally issued driver's license, so we could accept the Filipino driver's license as a document, okay? It doesn't need to be certified because the agent is seeing the original, okay? So doesn't need justice of the peace certification. So, as I said, this is the way that you can actually use document-based electronic verification or a combination of the two.
Great. And I think you mentioned, and I'm not sure if we'll go through it in a bit, but I think you mentioned also that there are approaches in managing customers that are higher risk customers.
Yes.
And that verification process being, I guess the agent or the affiliate is your first line of defense. They verify that the person is standing in front of them holds the ID that they've got. When you look at customers that pose a higher risk than the low or medium risk, you have processes in place to use electronic verification.
What we do in RIA is, as I said before, the agent or the affiliate is the first line of defense. Now, when this agent uploads the document into the RIA system, then compliance has a verification, second verification, to see that the document that has been uploaded and the details that has been included in the fields in the customer profile match. Okay, this is the second one, and this is for low and medium risk customers. However, once a month we have a report of high customers, high risk customers. High risk customers, obviously they are categorized as high risk for many different factors. For example, the place that you send in the money to, jurisdiction, the customer that you're sending the money to, the beneficiary. For example, the kind of occupation that you have, the reason why you're sending the money. There are different reasons or maybe the velocity, how often you send, or maybe the amount, how high is your send, your transfer. So if for any of these factors, then the customer is categorized as a high risk, then we electronically verify their identity through a third-party provider. And that's done every month. So this last thing is not being imposed by AUSTRAC. However, this has been actually recommended by our bank, and in order to be able to show them that we actually monitor our customers in a very thorough way, this is what we implemented in 2016.
So this is a way where we can say that we're also looking at satisfying any discrepancies that may exist. Is that right?
Exactly.
So if there are discrepancies that exist as a result of any electronic verification, you've effectively satisfied that requirement also.
Exactly.
Yes. Okay. Yes. I think it's a good point that you mentioned earlier around the comfort of banks. I mean, we're all very attuned to the concern that banks hold with respect to how we do things. This would be considered a very sort of robust approach, that you've got that first line of defense, that second compliance check, and then you've got external and independent third parties that are also verifying that information. If there are discrepancies that exist, then you do further investigation.
Yes, and I may say that this is for senders and beneficiaries. For agents, we always do the electronic verification as part of the onboarding process.
Okay.
Going to the next slide, we're going to talk about another requirement, which is the Sorry, we have a problem with the slide.
Just give us 1 sec. Sorry, we might just ask LexisNexis to move to the next slide, slide 10, while we sort out, but Eleanor's going to talk to it now.
Right. Consider additional risk associated with these customers. So I mentioned the beneficial owner of the customer. As I said previously, it's very important that the law says that we can assume that the sender and the beneficiary are the beneficial owners in the case, but we cannot assume that the agent is a beneficial owner if there is a trust. So we need to go all layers down until we find the beneficial owner. And when I say when we find, as soon as we say exactly this person would be the beneficial owner, we have to comply with all the KYC and with all the further information that we may require for normal customers. As I said previously with regards to politically exposed persons, we in RIA, Australia and New Zealand don't serve politically exposed persons, but you are not actually prohibited from doing it. You can take on board politically exposed persons if your risk appetite is covering for that. So you have to have measures in place to know that these people are high risk and what are your measures, what would you do to have the risk covered. Also, it's very important to know the source of funds or source of wealth of the transfer. And the difference between source of funds and source of wealth is that the source of funds is something repetitive, for example, a salary, and it will appear, for example, in the bank statement. And the source of wealth, it would be something that would happen once in a lifetime, for example, one or twice. Maybe you receive an inheritance, or maybe you're granted workers' compensation claim or something like that. So obviously there are different documents to be presented as evidence of source of funds or source of wealth, and you will be asking for this depending on the transfer or the velocity or the value of the transfer. And lastly, we have the purpose of the transaction, which is something you need to ask the customer. Why is this transaction being done? And this is important, that we have an understanding that this is not something that we want to actually interfere with something that is personal information. We need to have this information because the regulator is asking us for that information. One thing that I want to emphasize is that these CDD regulations apply to all financial institutions. So what it means is that the difference of how we comply would actually impact on our customer service. I may say, okay, I need to have source of funds, purpose of the transaction, and relationship between the sender and the beneficiary. But I don't ask any of those questions at the time of the transfer. What I do is I ask my compliance team to call the customer later on a phone call and ask them all those things. What do you think is better? Do you think it's better that approach, or do you think that is less, controversial, confronting? You know? If you actually ask in the same order where they are asking you to do yes, I want to do a transaction to Ethiopia and I want to send that. And you say, oh, what's the purpose of your transaction and what's the relationship between the sender and the beneficiary? And obviously, and if the threshold, if your requirements are to ask for source of funds, you said, could you please bring me a copy of your bank statement? All done at the level of the agent, of the affiliate. I know that the second approach provides a better customer service because obviously nobody wants that to do a transaction, to think that the transaction has been released, come home, and then receive a phone call from a compliance officer of the company asking all these questions. I wouldn't come back to that company personally, okay?
So you're saying that you fulfill the obligations around the additional risks, the source, source, purpose, relationship, any information around the beneficial owner, if any, at the time of conducting the transaction to, one, fulfill your CDD requirements, but also two, I guess, have minimal impact on the customer in terms of them feeling like you're potentially asking too many questions or investigating them.
Exactly. And a point in our favor, and I repeat it, is that this is required from all financial institutions. So they may say, oh, but I go to Western Union and they don't ask this. Well, maybe they don't ask this now at the beginning of the year because they haven't implemented yet the new CDDs, but by now everyone is asking the same question. So it will depend on how you present these questions and obtain this information, the level of customer service that you're providing, and if the customer is coming back to you. Next slide, this is what we actually did, is put as I said, the relationship between the sender and the beneficiary, and the purpose, all at the time of the transaction. So,
sorry, Alex, if I could just ask you to switch over to slide 11. We've still got a connection issue to the conferencing.
It's okay.
So,
I'll push it on to the next.
Sorry about that. Thanks.
So as I was saying, the losses conduct reasonable measures to update the information collected. For example, what we do in RIA is we know that the customer has to be ID'd and the identification and verification conducted in every transaction from $1 onwards. So what's happening if your ID has expired? So we have a system that we send an SMS to the customer saying your ID that is filed in our customer profile has expired. Please remember to bring a current ID on your next transaction. I may say that because of the privacy requirements, you need to have in your terms and conditions something as a note that the customer gives consent to the company to actually communicate electronically, that means by SMS or by email, with the customer. And the customer has to have the possibility to opt out. Okay, this is part of privacy, and once you have that in your terms and conditions, then you can send SMS to your customer. And it's very, very good sending SMS for two reasons. One, the customer, when he goes the next time, he takes his current ID, will be scanned, uploaded, and the whole process of verification will take place again. But second, you can also advise the transaction has been released or the transaction has not been released. We need further documentation, and please contact us.
So I mean, this is I guess more practical approach that you take in using electronic communications, not only to communicate updates to the customer about their transactions, but regularly and at different points in time communicate to them to make sure that I guess they've got the current ID that has or is about to expire. So that, I mean, it's a helpful tip. Lots of us don't look at when our ID expires. So it's something that works in RIA's favour from the perspective that you'll always have a customer coming to an affiliate with a current ID current, so that if there are any changes to the information that they bring, that it's current.
Exactly, exactly. One thing, if I may say, side effect of sending SMS informing that the transaction has been released has been that we caught many suspicious transactions. For example, when for any reason, and it could be many, could be, first of all, I'll tell you the situation. When, for example, I send an SMS to Diane saying, your transaction has been released, and Diane called me back, but I didn't send any transaction. What are you talking about?
Yes.
So then we can go and see, okay, who is this the fault? Who is to blame? Is the agent that is doing transactions without the consent from the customer? Is the agent that has made a mistake because he pressed in the customer profile too many names that are meant similar, and he picked up the first in the list without seeing that it was a customer? So one thing that we have also is that every time an agent or affiliate enters the name of a customer that is already an existing customer, a little photo of the ID presented comes up in the screen. So I ask the agent, as compliance, verify that the person in front of you is the person in that little photo in the ID. Okay? These are just practical tips that has helped, and I tell you, we didn't come up with this in January 1st, okay? But as we go, and I think this why it's important for us to talk to you in December, is because I'm already give you the process, the process problem, okay? All the solutions, and the problem and the solution.
Sure, and I guess that other SMS component is almost like a verification that the person who's sending the transaction is. So you're right in the sense that it's identifying and verifying that the customer who conducted the transaction is actually the customer on the other end of the SMS.
Yes, exactly. And also, just if I may say something on the side, that with that SMS and the yes or no that you receive from the customer is doing three things. He is and with this complying with the law and the privacy law and the Corporations Act, saying that yes, he agrees with the terms of the transaction, Corporations Act. Yes, he consents for you to do e-verification, privacy, okay, just in case at the end of the month he is a high-risk customer. And yes, he agrees with your terms and conditions. So with this, yes or no, and obviously you in the terms and conditions you said that every time you send an SMS, this is what you are agreeing to, and you cover, okay? Because you can have an audit from the regulator saying, or you conducted e-verification to all these customers, please show me the consent. And then you have a list of the consents because these people have said yes to that SMS. So let's go, and I was just a sidetrack, I'm sorry. The next one is, remember, for me, is to tell you the tips, okay? For the transaction reviewer. This is not so much for the agent, but now for the transaction reviewer. You need to know that you have a wealth of information within you, okay? Of course, you need to use the new CDDs. You have to remember how to apply them, but you have also to apply your acquired knowledge. The wealth of knowledge that you have acquired in all your life as a professional, from your past experience, and from the past experience of the other analysts that are sitting with you. You have to share situations. Obviously, we're not talking of tipping off. We're not talking about talking away or outside your company. But if a situation arises and you don't know how to actually deal with it, talk to the analyst sitting beside you. Talk to your compliance manager and see how the situation was resolved previously. And for you, and it works for me, I put myself in their shoes, in the customer's shoes, okay? And I ask my question, should I actually have acted in this way if I would act genuinely? And If it's not, then maybe say, well, why? Why he didn't act in this way? And that's when your investigation starts. Your investigation may end in 5 minutes after you ask yourself this question, because you find the right answer within the documents, within the purpose of the transaction or relationship, or if you see the history of transaction of that customer. Or maybe not, it may take you more than 3 days, and that's a suspicious report. And for the tips that I would take from the takeaway from this last slide is, remember to do the customer identification and verification by document-based, either e-verification or a combination of the two, and ask for the reason for the transaction and relationship at the time of the transaction, and lastly, the source of funds. And I didn't mention why and when we ask for source of funds. Since the law already asks you for source of funds when you have to report threshold transactions at $10,000 in cash, well, we may use the same limit, okay? So we say for all transactions for $10,000, or for all transactions, for example, in a week that add up to $10,000 in the last transaction, then we will ask for source of funds or source of wealth, if it depends on where the money is coming from. And I think that these are the best giveaways that I can provide you, and I'm open to any questions.
Great. I mean, I think if we can summarize, the CDD requirements really cover a lot of areas within your AML-CTF regime that maybe it's not as evident from the very beginning, but it really forces you to address your risk assessment and look back and go and understand the risks your customers pose by their relationship with you, their purpose of the transaction, any discrepancies of information in their source of funds. So everyone should have looked back at their risk assessment, revised it to see what additional risks their customers pose. After all, AML-CTF Act is a risk-based approach regime, and look at controls. I mean, and Eleanor talked about some of the controls that they've implemented, and thank you for sharing. But the controls that they've implemented are really practical in the sense that they've taken an approach to ask those questions up front, ask them for the first time. Certain information for subsequent transactions is really about affirmation. So Eleanor talked about if you collect name, address and date of birth from an ID document the first time, there's a photo that's stored on the screen for the affiliate. The second time the customer comes in, it's really affirming that information is the same or has it changed. And if it's changed and there's any discrepancies, investigating or managing those discrepancies by updating the customer information or referring to compliance to do more.
With respect to the other questions, the purpose and the beneficiary, these questions should be asked at all times.
Yes.
The reason being, and you may say, oh, but this is a pain. I'm always sending to my mom and it's always family assistance. Yes, but that's because you're a genuine customer.
Yes.
Imagine you're a criminal, okay? And you invented a name and you say, oh yes, this is my mom and I send for family assistance. But next time you come, you've forgotten all about what you said before, and it's my sister. I'm sending because I'm buying an apartment. And the third time, it's my friend, and why are you sending? Because she's having an operation. So what I'll do, I am the analyst here, I say, okay, the person, the beneficiary is the same name in all three transactions, but the purpose and the relationship is completely different. So for me, that's a red alert.
And that's a way of also considering any discrepancies in information. So it's not only about the name, address, date of birth being potentially different, but it's also a consistent response could indicate a genuine customer, whereas discrepancies in responses around those factors, so relationship, purpose, could indicate there's something to investigate.
Exactly.
Yep. I think also the CDD requirements force entities to consider how they risk rate their customers and risk rate their transactions and jurisdictions. So it's a matter for going back and looking at the jurisdictions you send to and from, how that impacts your risk assessment of the customer, how that impacts any controls and processes you need to put in place.
For example, we serve corridors like Ghana and Nigeria and Philippines. The three of them are very high risk in what is called fraud scams, okay, and most so Nigeria and Ghana in what is called romantic scams, okay. What it is in Nigeria and Ghana, and this is not said by me, you go to Austrac and you have the information there. Ghana and Nigeria have actually big call centers all dedicated to the romance scam. There are people that are trained to make people on the other side of the communication fall in love with them. And as soon as they fall in love, they start asking for money. Why? Because I need to go to hospital, my daughter needs an operation, I need to travel to see my mom. And we have seen that the transfers start very low. It may say only $150 to $200, but they grow, okay, and they increase. This is from Ghana and Nigeria. For Philippines, and I tell you what we are doing. For Philippines, another situation is that there is a romance scam, but there is also child sex exploitation or prostitution, okay? And people that really want to be part of a membership, that then they receive information and they can watch in the safety of their own home. Okay, so questions that we ask first of all is this, for example, we need to know the customer. The customer normally would be a Caucasian over 40 years old, sending money to one of many women in Philippines. And we ask, how do you know them? For example, because that's also part of the agent in communicating with the customer. Oh, look, it has a relationship. Yes, she's my girlfriend. Ah, your girlfriend. How do you do? Because she's here, she's there. I don't know, I met her in the internet. Then you know that may be, and most possibly, is a scam.
Yeah.
If that happens with Ghana and Nigeria, this is another situation when you start to look for patterns. Obviously, in our case, if the people is born in Nigeria or Ghana and then sending money to Nigeria or Ghana, well, there is no suspicion because they're sending funds to their family. But if the person is an Australian, 60 years old, sending money to a girl in Nigeria, then you have a question.
So some of the questions, I think we didn't cover them all, but some of the questions that you ask at that sort of initial customer phase is where they're born.
Well, yes, country of birth.
Country of birth, and that is a one way to indicate.
Country of birth,
yes.
Occupation.
Yes.
You request obviously, and everything that is in the document, anything that is in the document, you keep it, okay, as information.
But in addition to that, though?
In addition to that is country of birth, the relationship between the sender and the purpose, and the occupation. The occupation is also very good because as an analyst, you use as many public searches that you can to do your searches. You go to LinkedIn, you go to Google, obviously Facebook, Twitter, anything. And it actually could support or discredit the information that you have.
So just to summarize that, I guess from the wealth of things you could ask a customer, it may or may not be focused on where they're sending to. So you gave the examples of Ghana and Nigeria. That's where it's important because of the romance scam risk that we look at the relationship between the sender and the beneficiary, and the affiliate engagement with the customer, knowing that does the sender actually know the beneficiary, or have they only met on the internet? So that's where that particular information field is important to consider whether or not further investigation or transaction to be put on hold is done.
Exactly.
Yeah. I mean, I think in addition to sort of the risk assessment that you need to look at, the ongoing customer due diligence program around the risks, you need to look at your processes around customer identification and verification, but also a key new one is how you manage discrepancies. That needs to be factored in your AML CTF program as well as your Part B. And possibly coming out of this, if there are discrepancies, if there are new factors around consideration of high-risk customers, you also need to update your the reporting component of your AML program to consider these new risk factors.
Exactly.
So I think CDD requirements, whilst it's been in place for a little while, it's a very big change, and I think reporting entities should have considered this as a very significant change in the way that they conduct their designated services. Eleanor's talked a little bit about the different types of customers, and I think it's important, probably one of the key outtakes is that if you are a remittance network provider, one of your customers is actually your affiliates. And everything that you do in terms of beneficial ownership, the nature of the relationship with you, actually needs to be implemented for your affiliates. And for our organisation, we call it ongoing affiliate due diligence.
Oh well, you have it.
So I guess it's something that you need to consider, that they are a customer because they are the face to you of the customers to your remittance network provider.
Exactly. They are representing you, so they are you in front of the customer. Exactly.
Any final comments, Eleanor, in terms of the CDD requirements, where RIA is in terms of, is there more to do? Are there improvements to be made? Is it ongoing?
Well, I'm very happy to say that the approach that AUSTRAC is taking is a different one from the one that we used to know. We used to know AUSTRAC only as a regulator and policing and picking up on the errors that we made. The approach has completely changed this year. It's not only AUSTRAC, but it's part of UK, US, New Zealand, AUSTRAC, and the Canada regulators. Okay, the 5 countries work together, and not only between them, they're trying to do a better regulation sharing, but also they come and try to work in partnership with you. And actually, we inform each other of new situations. They may have a view, but practically we may have another view of the same issue. So our position is to actually say, okay, this is the law, but this is, unfortunately, this cannot work practically. So the way we do it is this way. Could you please, amend the law in a way, or maybe do a guidance in a way that it actually covers the best practice, okay? So we know that this is the way to act if a situation like that arises. I think this is the most important step taken between regulators and all financial institutions, okay? We have a say that before we didn't.
Okay, and I think, look, I think as part of the webinar series, this one AUSTRAC is not participating in, but there are future webinars that are lined up where AUSTRAC will play a significant role in providing a regulatory perspective. We hope to have webinars that provide that balance for you, and there is discussion amongst what the regulatory perspective is versus what the industry perspective is. It's not always the same. It actually quite often can be different, and things can be interpreted differently. But I think I'd like to thank Eleanor today for going through the webinar and providing your perspective. You've shared a lot of practical tips, which I think a lot of us can take away and think about how we can implement them in our business. I might just switch tracks quickly and wrap up and quickly talk about the ARCPA certification program if I can. And I think Eleanor also just touched on, I guess, what is best practice in industry. For those of you who don't know about ARCPA and its certification program, we are really we've taken an approach to look at how we elevate the compliance practice and operational standards in Australia by driving increased participation by remitters in such forums like the webinars. The certification information is on our website. We are about to launch version 2 of the compliance best practice, which sets out the standards used to measure whether or not a remittance business meets the guidelines to be certified. We've had a number of certified members, and we have a number of applicants in line. So we look forward to receiving more applications, and also any questions that come off the back of this webinar addressed to Eleanor or myself around CDD requirements, or the certification program can be sent to info@arcpa.org.au. Thank you for your time today, and back over to Alex from LexisNexis.
Thanks very much, Diane, and thanks, Eleanor, for a very informative hour. You've touched on many of different issues throughout these CDD requirements that also at Lexis that we look to address through our technology and data. One part obviously has been that over the last 40 years we've been developing our technology and data in line with two parts. One, in line with regulation, and two, in line with the market needs. Eleanor mentioned a large range around the regulations under the AML Act in Australia, but also then how that affects her business. A large part of that is where we look to evolve our data to make sure we're providing supplementary information so that you don't have to go to your to those beneficiaries and then those people who are remitting money internationally and asking numerous questions, but only asking really specific questions, as hopefully the information supplemented by our data set would help you through that KYC process. The other part is around eKYC. This is a term in which Eleanor referred to quite a lot within this webinar, and the fact that what we try and do at Lexis and make sure we are automating systems and providing electronic verification and authentication tools to make that manual process a lot more efficient and effective. Apart from the technology is also the well compliance data set, which many of the organisations in Australia are currently using and also internationally. So the well compliance data set is made up of over 2.5 million risk entities across 240 countries, including those in the Philippines, Ghana, Nigeria, which were mentioned quite a lot as well. The side of well compliance is it does cover those key areas of sanctions enforcement, politically exposed persons, as well as adverse media. The adverse media piece is quite interesting when you're speaking around the romantic links, as mentioned by Eleanor. Those who have made the news would be therefore included within our data set, along with the politically exposed persons being a large component. Obviously, when we're talking about politically exposed persons, we're not simply saying you cannot deal with them, but entering that into your risk-based approach and taking that into consideration in line with CDD requirements, as Eleanor mentioned. Also, we have the largest research team in the industry, which is providing that information to supplement your research and client-facing operations. The other side of the well compliance data set is it does cover 57 languages. So as mentioned, if you are doing remittances internationally, you are looking at countries that may not have names in Roman script. So looking at having a coverage across multiple languages also helps organisations being able to understand who the beneficiaries may be, and also that further information and profiling that we provide through structured data. Obviously, having the largest research team, we can provide further information to make sure that you are using the data correctly, but also making sure you can implement your risk-based approach effectively. In line with our data, as I mentioned, we also have market-leading technology. One of the technologies we do use that helps speed up the KYC process is Bridger Insight. Now, Bridger Insight is the most widely used screening tool in the world, and it also is able to use a flexible API web services to connect with current CRM programs that you may be operating on. A large range of organisations, from banks to corporates to remittance companies, all use this API to make sure that you are automating your systems and hopefully speeding up that process to onboard clients or to send money internationally. Bridger is backed by well compliance data, which is doing your majority of your screening in terms of watch lists. However, other tools such as TrueID, which is a document capture program, does the authentication of driver's licenses and other documentation such as passports, which can also speed up that KYC process. And as Eleanor mentioned, being able to do facial recognition work as well as then looking at our other program, which is Instant Verify International, which is a verification process that can be utilised to identify individuals in over 35 countries. Why is this important? Obviously, understanding who your clients are, but also who the beneficiaries are, as I mentioned within the AML Act. through the combination of those different technologies, we're looking to automate the workflow process, including having full audit history, which I'm sure, as we mentioned last week, and as the AUSTRAC regulators mentioned last week, is vital when you're conducting client due diligence. Obviously, the program being Bridger is also highly customizable. So what we're looking to provide is really a custom-made tool for each individual remitter to be able to then utilise to ensure that they have an effective process that can help identify who beneficial owners are, those source of funds that Elena mentioned, which is obviously vital to that system that you are operating. From a Lexis standpoint, we are absolutely thrilled to be involved with ARCPA. We provide a 30% discount to all ARCPA members and remitters in Australia to these types of products to make sure we are providing cost-effective, not only efficient programs to the businesses. This is something that we hold highly in regard, as we want to make sure that we're partnering with the industry to make sure that financial inclusion goes to all parts of the world. As the threats of debanking continues, whether it's in Australia or abroad, we want to partner with the remittance industry to provide safe and secure screening and client due diligence measures to ensure that financial inclusion is reached globally. Thank you again to Elena as a guest presenter, and of course Diane for again being the moderator and organising today. As Diane mentioned, this will be for the start of what we see as a long-running series of webinars to help educate the remittance industry within Australia and abroad, as many have dialed in internationally, to understand a little bit more about client due diligence and other regulatory regimes that are impacting the businesses today. Thank you once again. Hope you all have a lovely Christmas season and safe holidays, and we hope to see you again in 2017. Thanks everyone for joining, and that's all from us today. Thanks. Bye.
And this concludes today's webcast. You may now disconnect.